Hey guys, so today we're going to be having a look at Workhorse, which is an electric vehicle company that have recently been on the rise. A couple months ago they were trading at about $2 per share, but they have shot up right up to about $20 per share, and they have since then come back down a little bit to about $16 per share, 16, 17. So today I'm going to be having a look at the company and overall looking at whether now is a good time to get into it. And also, before we get started guys, remember to subscribe if you do enjoy this video. It really does help out a lot, and also remember to leave a like too. So let's get started. So to start off with, let's have a little look at the background of the company. So Workhorse is a company that makes smaller electric delivery vehicles designed to complete the final couple of miles of a delivery. So they are currently trading at about $16, it says 15 but it's since gone up a little bit, about $16 per share. And there's a lot of excitement around this company due to them being a exciting and innovative electric vehicle company, as well as them being in the running for a very large $6 billion government USPS contract, which would absolutely it'd be a big deal for the company, as that would be a lot of potential revenue coming from that. So there is a $18 billion annual addressable market for last mile delivery vehicles in the US. And 350,000 last mile delivery vehicles are purchased by US fleets every year, and that number is likely to keep going up over the years as e-commerce does continue to grow every year. So what makes Workhorse exciting and what makes it sort of in the trend at the moment? So to start off with, their C-Series vehicles help delivery companies operate more efficiently in several different ways. They are higher fuel efficient. They reduce operating costs from $1 per mile to 36 cents per mile, so that is quite a significant saving. They have lower maintenance costs, and also they have increased driver satisfaction, retention and health. So a single Workhorse vehicle could save a company $170,000 over a 20-year period compared to other market alternatives. So if you're going to buy out a fleet of vehicles, if you're like a logistics company buying out a fleet of vehicles, then this could save you a lot of money in the long run. So the technology used for their vehicles has also been verified by massive logistics companies that include UPS, DHL and FedEx. And also in February of 2018, UPS and Workhorse started development of the new C1000 vehicle in conjunction with a 1,000 vehicle order. So that is pretty promising to hear. They have a 265,000 square foot manufacturing plant that's already in place in Union City, Indiana. And this gives them the ability to produce 60,000 vehicles every single year, enabling a clear path to profitability in the future. They do also have $100 million of cash in the cash reserves to work with. That obviously is very helpful for continuing to grow the business in the long run. And they do have the opportunity to subcontract with LORDSTOWN Motors, which is sort of like a partner company, but we'll touch on that a little bit later. So another cool thing is they have they've created an app called Metron, which allows logistics managers to track and monitor the performance of all the vehicles in the fleet. And this can collect data which can help managers to optimize route planning. So that's sort of another way that they can help companies save money by using their vehicles. They also have a drone product that is currently in use in some areas, and it's made some deliveries already for UPS and StockX, the sneaker trading company. And this drone can reduce last mile cost per package from $1 to $1 from a gas vehicle to about 4 cents using the drone. So again, that is a pretty massive saving difference there. So the e-commerce market is growing every single year, and more people are ordering items online. So this means that the demand for product delivery is on the rise, and companies shipping items to their customers will want to try and cut costs where they can. And if they use the smaller electric vehicles, such as the ones that Workhorse produce, then they can get their products to the customer's doorstep for cheaper. So every company is going to want to try and save costs down the line. So I think Workhorse has got a lot of potential there to work with large companies, e-commerce companies, to help them save money. So another pretty exciting point is that ARK Invest, which is a respected global asset management company that specializes in disruptive tech and innovation, have recently been adding Workhorse shares to their ARK Q ETF. So this is also known as the ARK Autonomous Technology and Robotics ETF, and this is an ETF that has performed well over the years, achieving a 170% increase over the last 5 years. So recently they have been massively increasing their position in Workhorse. So a couple months ago they were at sort of under 100,000 shares, and right now they're above 400,000. I think the last time I looked they were on 415,000 shares. So a respectable ETF there, continuing to increase their position in Workhorse is very promising. So as I mentioned before, they have a connection to LORDSTOWN Motors. So Workhorse granted LORDSTOWN Motors a license to the technology and design of their Workhorse W15 pickup truck, which is a vehicle to compete with the Tesla and Nikola equivalent. So LORDSTOWN will be the sole manufacturer of the vehicle, and they will use their 6.2 million square foot facility, which is capable of producing 250k vehicles per year. And Workhorse will retain a 10% equity stake for 2 years in this, in the company themselves. So they'll also receive a royalty fee for each electric pickup truck delivered by LORDSTOWN. So this is a pretty massive revenue generator for Workhorse, having this partnership. So 10% equity in the entire company of LORDSTOWN Motors is pretty big, as well as the royalty fee, which is going to really sort of give them some funds to work with in growing the company. And Workhorse will no longer manufacture the W15 model, and this will allow for the company to focus manufacturing facilities to solely produce the last mile delivery vehicles. So again, that will sort of free up some space for them to focus on the delivery vehicles. So LORDSTOWN Motors and Workhorse are going to be working together for the foreseeable future, with both companies being based in Ohio. And General Motors sold their LORDSTOWN factory plant in Ohio to Workhorse last year. And this relationship to Ohio will be quite critical when looking at the upcoming USPS contract, which we'll talk about next. So the USPS contract, sort of the main reason why Workhorse has been spiking up recently. So there is currently a large contract with the USPS valued at over $6 billion up for grabs, and that will involve the addition of 200,000 vehicles to the USPS fleet. There are only 3 remaining companies that qualify to be selected for this contract, one of them being Workhorse. And it's quite likely that Donald Trump will put pressure on the USPS to choose Workhorse for their contract. So Ohio is a very critical state for Donald Trump to win the upcoming US presidential election, as it is a swing state which could go either way. And Ohio is also where General Motors sold their LORDSTOWN factory plant to Workhorse, and will therefore be able to employ more people if they win the contract. And as you can probably sort of imagine, Donald Trump has, he's already promised Ohio that he'll be providing more jobs for them. So he'll want to impress people in Ohio in order to get them to vote for him. And yeah, as you can imagine, this sort of fits in together nicely for Donald Trump potentially influencing the decision. It will benefit him if Workhorse win, as that will sort of help him to win the Ohio state for the election. And yeah, it's quite promising for Workhorse in that sense. So also the House recently passed an infrastructure bill stating that the $6 billion being spent on upgrading postal service vehicles requires 75% of the new fleet to be electric or zero emission vehicles, and this will rise to 100% by 2040. So again, that kind of, that's really playing into Workhorse's favour as an electric vehicle company. That is something that they would be wanting to see, so they're probably quite happy to see that announcement. So there are 2 other companies as well as Workhorse that are left in the running for the USPS contract. So one of them is a company called Carsan, which has a hybrid option which satisfies the zero emission requirements somewhat, as the cars can be electrically charged. However, they are not an American company and therefore not as likely to be selected due to Trump having a big favoritism for American companies. So the other is Ford, which offers gas-powered vehicles and therefore does not really meet the zero emission requirement. So they also Ford recently announced that their CEO is stepping down, which makes it probably less appealing for the USPS to go for a company that is going through a management transition period. So again, that kind of is a bit of a worrying sign if they were to go with Ford. Management change and not having green vehicles makes me think that USPS probably won't go with them. And then another company called Mahindra, who a lot of people have been talking about for this contract, they recently, the other day, dropped out, so they are no longer a concern for Workhorse. So it's highly unlikely that Trump will grant a $6 billion government-funded USPS loan to a foreign company, and it's also unlikely that it's unlikely to be a non-electric option due to the requirement to be zero emission. So again, I think all of this sort of plays into Workhorse's favour and makes me think that they've got a pretty good chance of winning this contract. And then finally, California recently passed a law to make zero emission trucks and vans mandatory by 2045, with the first phase starting in 2024. So this is likely to benefit existing electric vehicle companies, especially the likes of Workhorse, who are already producing these heavier vehicles. It's also quite likely that other states in the US will follow suit with similar zero emission laws come in the upcoming years. So all of that sort of, is very beneficial for Workhorse, who are a pure electric vehicle company. It's also worth noting that this contract, it's not going to be announced the winner for another little while. I'm not 100% sure on when it's going to get announced, but people seem to think around September to October time. Probably more like September time. So we could be seeing an announcement in the upcoming weeks potentially. So, it's one to keep an eye on for sure. So finally, should you be buying Workhorse? Now, there's a lot riding on the USPS contract for sure, which, like I said, is due to be announced quite soon in the next month or so. So if they fail to get it, then there'll probably be a sharp drop in the price of the share, as people will be selling off and they will lose faith in the company. So that is definitely one thing to watch out for. If you can't sort of take the risk of it, then it's probably not a good idea to get into it, as there is probably quite a high chance that it does drop, or a significant chance it does drop. So on the flip side, winning the contract is likely to boost the share price quite a lot. So if they do win the contract, then we could see a potential doubling in the share price, maybe even more, depending on how much hype there is. So it's kind of like a high risk, high reward stock to get into. There's a fairly big chance that it will go up in price by 2-3x, but there's also a fairly big chance that it could drop by like 50% potentially. So whatever the outcome, Workhorse, in my opinion, could be a pretty massive company in the long run. And this is because their business centers around delivery of packages that utilizes electric vehicles. And electric vehicles are becoming more and more popular over time. And they will continue to do so in the upcoming years. And this is especially because governments and companies are constantly under pressure to have environmentally friendly operations. And it's always something that companies are looking to do, is to reduce their emissions. So I think that's only going to increase the demand for Workhorse vehicles in the long run. And combined with this, e-commerce is growing every single year too. So it's kind of two emerging or growing markets, e-commerce and electric vehicles. And as more and more people in America are buying online, shopping online, again, more deliveries are going to have to be made every year, which means more vehicles are going to have to be bought every single year. So I think all of this sort of plays into Workhorse's hands, and I personally think it's pretty exciting company to get into. Got a lot of potential, but just remember, guys, I am not a financial advisor. All of this content in this video is purely for entertainment purposes only, and it is all my opinion. So you should never buy a share just based on stuff that someone on YouTube has said. So yeah, always remember to make your own decision. But yeah, like I said, in my opinion, there's quite a lot of potential for this company, and I personally am looking forward to seeing what happens in the upcoming months. So that is all for today, guys. Drop me a comment, let me know if you are already in this company or if you're thinking of picking up some shares soon. I'd be really interested to know. Remember to leave a like if you did enjoy it, that really does help me out a lot. And also be sure to subscribe too if you want to see more videos similar to this in the future. So apart from that, guys, thanks for watching.